Alright, good day. This is Festus FX. This is an educational video, and we'll be doing a full review on volatility 51S. So in the coming days, what we're expecting on this asset. Alright, so if you're just coming to this channel for the first time, please don't forget to like, comment, and subscribe. We'll drop in more educational videos about the forex space here. So quickly, let's dive in. So first thing first, we want to go to the weekly time frame. All right, so from the weekly time frame, we can obviously see that the market has been bullish, as you can see, and we're having some sort of retracement. Okay, so this week just started, and last week's low has been taken out. So personally, for me, I expect the market to remain bullish. All right, but for now, price is retracing, so there's no reasons for us to expect a new higher high for now. So from the weekly time frame, I expect price to at least move 50% of this candle. Okay, so 50% will be just around here, as you can see on the chart. Okay, let me indicate it with this. So this is 50% here. So price should get to that red line. All right, 50% of the previous week's candle. Okay, so moving to the daily time frame. So on the daily time frame, you notice where we have that 50% coincides with a daily fair value gap. Hope you can see. So once again, the higher time frame validates the market direction. So we expect price to retrace back to that area and then sell off from there. All right, we wanted to sell down to all these previous areas. So this is the weekly high that was broken before, so price could retrace and get that. So basically there. All right, so now first of all, we're paying attention to what the market is going to do currently in tomorrow, next few days, and probably weeks. So we expect price to rise and get here. So the question is, where do we find our entry? Where do we put our stop loss? We already know this is what we're targeting. Okay, so this will take us down to the lower time frame. A lower time frame. Okay, so on the let's go to the 1 hour time frame. So you notice from the weekly and the daily time frame, I came straight to the 1 hour time frame. So on the 1 hour time frame, you notice price had taken out this liquidity. All right, so that was price taking out liquidity. If you don't know what liquidity is, make sure you send a DM and join our academic classes to learn about liquidities. Okay, so you notice price has taken out our liquidity, and prior to this highs, this is the highs that took out that low. So that high was formed there. All right, so we know currently on the short term, we know where prices we're expecting price to get to. Now we have an internal range liquidity here, right here. As you can see, it has already been purged. Price has already purged it. When I mean purged, price has swept it out. So we can call that a mini break of structure. Hope you can see a mini break of structure. So personally for me, 3 things. So I'm going to be looking for a buy entry, and I want to buy below these areas. So if you take your Fibonacci, for example, just take your Fibonacci from this high to this low. Now I don't expect price to go above these highs. If price goes above this high, it may just go above this, and then there may be no reasons looking for buys below here. So this would be our area of interest. Okay, so I don't want to see price go above this high. Okay, I just want to see it trace. Personally, I would have said let's sell. All right, but because we're expecting buys, you should wait and look forward for buys. So let's take this aside. So you can see we have, this is our area of what? Discounts. So this is our buying zone. So we want to see price come to this area. So if we're expecting price to come to these areas, we want to look for two basic things. Number one, fair value gap. Number two, order blocks. All right, so clearly we have a fair value gap here. It's a tiny fair value gap. And then we have this order block that has not yet been mitigated. This order block here. So those are the two areas we expect price to react from. Price should get down here and then buy. And then buy. Now price can get here by tomorrow. So tomorrow is gonna make it low around this area. And then we can buy straight for these highs and to the other highs. This daily fair value gap we have right here. I hope you're following. So if I want to place a trade on this 15 minutes time frame, so I'm going to be using the 15 minutes time frame as my entry level for this trade. So okay, so this is what I'm going to look at. So take a trade here just at the beginning of the fair value gap, and then I could keep my take profit here, or I could take it as high as this, and there we go. Now if I want to sell from this, which is risky, this is how I would approach it. This is just a side note on this video. I don't want this video to exceed 10 minutes, so I just want to be fast. So see this wick that was created here, the 50% level, which you can see here, is where I want to what? Yeah, this is 50%. That's why I would have sold. Price already selling from there. So if I want to sell from here, I keep my stop loss just above this high. Remember, I don't want to see price sweep those highs, and then my take profit will just be here. Now I could obviously fine-tune this entry from the 15 minutes time frame again. Same thing on the 15 minutes time frame. Okay, so I could also obviously, this is the ID take profit, entry, and stop loss. Alright, but I could reduce my risk here, just above the closing prices of those candlesticks, and then just like that. So if you have any question, quickly share it on the comment section, and you can also tell us which asset you want us to drop an analysis on or a review. Then we'll drop it on this channel for you guys to watch and learn something. So guys, I'll see you in the next video. Don't forget to subscribe, like, and comment.